What is up, YouTube? Welcome back to Stocks by the Numbers, and I wanted to just quickly go over a company that has been around, as we see here, since 1904. I don't have much to say, but I just wanted to give my 2 cents here on a company that I know a lot of people were asking about. A lot of people are very excited and potentially considering stepping in on this because of how cheap the share price is. And of course, we saw where it used to be, and we're seeing where it is now. So a lot of people are wondering if this is worth their attention. Let's find out. Right? Name of the company, Rolls-Royce. So listed on the London Exchange, ticker symbol RR. Here on the OTC markets, which is the over-the-counter markets here in the States, we have RYCEY, we have RYCEF. We also have preferred share, ticker symbol of RLLCF. Now this company, 52-week low 71 cents, 52-week high $1.75, market cap 10.3 billion. Right? As we see, the company was double digits, bouncing around, right? 10, 12, goes sub 10, maintaining about $9. We'll call it 8.5 going into our wonderful 2020 year. And then, of course, completely falls off a cliff and over time pulls back to $1 and change. As of late end September, as we see here, 70, 80 cents, hitting new lows. However, bouncing off of those lows, now rallying over 50% from those lows. So let's see what the heck is going on, right? So again, $10.3 billion market cap. We come over here. Yes, the revenue did fall off going into 2020. However, first of all, the company was rocking and rolling going into that point, really. Again, not at net income positive. However, revenue consistently growing. I looked at 14 billion, 15 billion, 16.5 billion. So the company's adding $1 billion in revenue year over year. Definitely nothing to sneeze at. Then we moved to 2020, 11.5 billion, 2021, 11.2 billion. However, they did go net income positive for 2021, right? So you got to give a little credit where credit's due. But we switch over here quarterly, and you can see that revenue bouncing around basically between like the $2.5 to $3 billion level. Net income negative across the board, except back here in June. And again, I know a lot of people look for profitability. However, again, you had companies like Rivian. I know it's recently been selling off, but you got companies like Airbnb, which we looked at recently. I mean, these companies are bringing in $6-7 billion, and they're net income negative, right? So if they're not getting the shit kicked out of them, and people are still talking about it like, oh, it's a growing business, you should consider adding shares to your 401k and your IRA. Yeah, well, if you have the audacity to say something like that about a company that financially unstable, then you sure as shit better believe that I'm confident talking about a company like Rolls-Royce. They've been around since 1904. I mean, they get defense contracts. They build some of the most luxurious automobiles underneath the sun. The company is developing jet engines for the government and for public airplanes and whatnot, right? So chances are, in my opinion, the company's not going anywhere. And when we talk about bailouts here in this country, right, we go overseas. This is, again, a company based in the UK. If they had to bail out somebody, it would be their brand name companies, right? Their Barclays, their Rolls-Royce, right? These are the companies that they would want to protect. So in my opinion, this company is probably not going anywhere. And even if it trades 1.5, even 2 times this revenue, I mean, you're talking about a $15 to $22 billion market cap, which would bring this stock to about $1.85 to $2.40, like somewhere in that range. And again, this is conservative, and this is more in the shorter term, believe it or not, because I do believe that over the years, this company is going to rebound and make the U-turn. And see here, even at these levels, you're talking about like the low 4s, 3.5, 4.5, 3.5. That's almost a 200% rise from where we are now, right? So that's why I'm saying, even if it slowly climbs back to some of these levels before it really starts rocking and rolling, and again, you could say it was in a downtrend for like 1.5 to 2 years going into the pandemic. Okay, so it was at 9, 8.5. Let's cut it down. Let's say it's $6, right? $6. That is 500% higher from where it currently is right now. So that's why you may potentially run into some short-term volatility, and it may be a company that a lot of people are not talking about. However, you may have the potential to make some serious percentage gains, again, in the long term. That is what you guys need to understand. It will most likely take years, as it did to completely sell off, to completely rise back up to potentially where it was, or even $4 or $5. This may take years. But again, you guys, a lot of people get excited and have positions in companies like Mullen that are not worth your time at all and will not even be producing vehicles for like the next 18 to 24 months. So at least this company is currently doing business and earning revenue and apparently hitting records on the automobile side. So, if you have the money, the assets, and the level-headedness to invest into a speculative gamble like a Mullen Automotive, then, yeah, in my opinion, you sure as shit should take a couple of bucks and you should step in here on Rolls-Royce and consider tucking it away for the long term for the next several years. But if we click on this article here, which is right here, it says here 6,000 cars, 8% rise in 2021, highest annual figure in 119-year history. Company expects to deliver record profits when it discloses financial figures in the coming weeks, right? Insane. A quarter are in China. A quarter of its sales are in China, fifth in Europe. Sales in China, obviously, they're still locked down. They talk about the customization. Record profits and deliveries during the year came despite a quite substantial hit after stopping orders to Russia. Now, it talks about Russia. Average price of the vehicle, €500,000, double what it was 10 years ago. The Phantom still, sells for over €2 million. Private office in the Middle East, leading region for customization spending. But it mentions, right here we go, right? Slight fall in sales in China. Brand also had a quite substantial hit from Russia, where it typically sells 250 to 300 models per year. Going back to our original figure of 6,000, that's 5%, right? So they lost 5% of their sales because they can't ship to Russia. They lost 25% of their demographic because China is now locked down again. And despite all of that nonsense, the company saw an 8% rise in 2021. Now, first of all, awesome drive in demand from the U.S. market here in the Americas. But more importantly, imagine if they were able to ship their cars to China and they weren't locked down and they were able to actually receive these cars and do business with China. Imagine if this turmoil overseas wasn't happening and Russia, Ukraine, this whole conflict didn't even happen. They would regain, what did we say, 5% of the annual number of cars sold and shipped. Which means, again, if China and Russia, that shit wasn't going on, this 8% rise might be like a 14, 15% rise year over year. Let me tell you something. That is nothing to sneeze at, especially when we're talking about a luxury automobile sector, okay? So this company, that's why, in my opinion, again, in the short term, it might be volatile. You might not immediately get massive pops and jumps that you want, and you might not make $1 million within the next 2 to 3 months. But I'm telling you, in the next 2 to 3 years, in my opinion, I really think this one could pay off for you. We come down here. The business, which only sells 12-cylinder petrol models, is preparing to launch the first fully electric car, the Spectre. So, here we go. We got the workers getting a nice little bump here with their pay, 17.5%. That's phenomenal. First fully electric car to go on sale next year. Got some U.S. tax cuts. Car sales helped by, quote, life can be short mentality. Yeah, I think a lot of people who've made quick money are seeing that, the whole world can go to war with itself tomorrow and anyone can lose anything at a moment's notice. We have a lot of internal problems with a lot of high business countries, higher GDP countries. Me personally, I don't know exactly how to say it, but you look at all of these countries, right? And we're all really going through some shit. Whether it's on the political side, whether it's on the economic side, the States, Canada going through some shit. You have pretty much all of Western Europe going through some shit. China again, completely locking everyone down, going back to those rigid standards and whatnot. So, with all of this shit going on, you got people being canceled, people being thrown in jail, right? So, yeah, if I was a young man, extremely blessed and successful. I'm sitting here with a couple of $1 million, or a couple of £1 million, we should say, right? Because they're based out of the UK, so the average car price £500,000. Yeah, I can understand this mentality. Life can be too short. You know, you got Russia with the conflict with Ukraine. People talking about, again, the lockdowns in China, but of course also China potentially invading Taiwan. There's a bunch of crap that's going on. People saying Joe Biden is destroying the economy here in the States. So, again, yeah, with all that crap going on, if I had the assets, yeah, I can understand that, quote, life can be short mentality. And, yeah, let me just, write you this check, and why don't you send me a massively luxurious vehicle, and I'll enjoy myself while I still can before the shit hits the fan and everything gets potentially taken away from me. I can understand that. But, I just feel like this is going to be the turning point year for Rolls-Royce, right? Because usually when a company gets beat up like this, when they get beat up like this, again, they beat them up for a couple of years, and then they kind of start to rebound for a couple of years. So we may be in the rebound. And, again, you could potentially say we had like a descending wedge that it's potentially breaking out of. But as you can see on the 5-year chart, top fib $1.19 is above that level. 1 year above the $1.18. Year to date, it's only been a few days, but even on the 3-month look, top fib $1.25, it hit that, and it did not pull back completely. It stayed above the simple moving average and bounced off this bottom fib here of $1.21. So I think we're seeing some stability here moving forward. Same thing here, resistance here at $1.22 on the top fib. This is 1 month chart. And again, drops to $1.20, but now that is the support. So it looks like it wants to continue trending upward. Even on the 5-day, again, you can see above 122, back bouncing above, between these fibs, $1.20, 21, 22, respectively. But last thing here, we switch over to stock charts before I let you go. And I just want to show you here, obviously, this moving average, the 200-day, slowly pulled back from, we were north of $1.25 here just a couple of months ago. Now it's at 105. 50-day moving average, swinging very volatilely. Above $1, dipping to about 87 cents, reclimbing back up to $1.07 now. As you can see, the top Bollinger Bands, these Bollinger Bands have now widened because it took this gap up. So anytime there's a gap up or a gap down, these Bollinger Bands, open, like a mouth, like Pac-Man, and they widen on the top and the bottom. And it's been basically bouncing off of the top Bollinger Band and even closing above it for several trading sessions since the ball has dropped. So now, in my opinion, with an RSI here still above 70, right? It went north of 70, so now it has to calm down. So in my opinion, maybe 1, 2, 3 days of flatness or potentially down days so that it can reclimb and head higher and retouch the top Bollinger Bands and continue climbing. However, I will say, look at this here. Going back, you see resistance on this 200-day moving average, fighting to break and close above it, bouncing off of the 200-day moving average, your support, bouncing off of your 200-day moving average, bouncing off of your 200-day moving average, resisting multiple times, bouncing multiple times. So this is your level right here, this $1.05, this 200-day moving average. Obviously, it's going to increase and decrease in value day after day, but right now, this 200-day moving average, $1.05, in my opinion, that's going to be the bottom. And of course, you have the 50-day moving average meeting up now at the mid-price. You have the 200-day moving average meeting and crossing here on the 50-day moving average at about $1.05, $1.06 and change. So that's why that, in my opinion, is going to be the major support level moving forward. And in the short term, I feel like it could pull back to this mid-Bollinger Band of about $1.11. And if we switch over here to the weekly, oh, look at that. So it has since jumped above this 50-day moving average on the weekly, which it's been below for almost a year. So the ball drops. It takes a massive positive jump above the moving average. And now, what's the value of the 50-day moving average? $1.11. So now we have $1.11 on the weekly with an RSI still sub 70, right? So it can continue to go higher. That's why I'm saying it could remain flat or potentially pull back 10, 12 cents here to this level and then bounce and go even higher into the 140s and the 150s again. But, you know, that's just my opinion. I'll leave it there because, you know, there's a lot to say about this. But brand name company, been around for a while. Just wanted to give you guys a quick update. So, once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. Do me a favor, like the video, helps out the algorithm. Subscribe to the channel. It means so much to me seeing the community grow. But moving forward, I wish everyone success. I hope everyone makes a couple of dollars. I want to thank you for stopping by. I'll see you guys in the next video.